This is an overview of how to start a real estate brokerage in California in 2022. Now, I'm going to go through some slides that just have the key concept mentioned and then describe it a little bit more in depth rather than have lengthy slides full of text. So we'll jump right into it. So the first step is to get a broker license. This is fairly obvious, but it's worth mentioning. You need to either be a salesperson for a certain amount of time, or I think the other way to do it is if you're already an attorney. But for most people, once you're a salesperson for a certain amount of time, you can apply through the Department of Real Estate. Now, some people that start brokerages hire a broker of record, which is another option as well. And that's basically where you find someone, maybe this person's semi-retired but has a broker license, and they can effectively be the broker of record for compliance purposes. So once you get your broker's license, you can do business as a sole proprietor. So once you have that license, you're ready to go. And you can operate as, let's say, your name, we'll say Jane Johnson, broker. That would be her official name to do business. And she is at that point able, with her broker license, to represent other people for the sale of their real estate, their real property, and collect a commission. In the most basic sense of functioning in real estate, that's the most simple way to do it. That's the most basic approach. But things aren't that simple in practice, unfortunately. And so that's what we're going to explore a little bit further. So while the broker license is the minimum, there's a little bit more to talk about. So we'll go through another step here. So you'll choose your name. And this is obvious, of course, but we should talk about why it's actually a little bit more complex than it looks on the surface. When you choose a name, are you going to be a corporation or a sole proprietorship? Because that's going to make a difference. And maybe you're a corporation that has a separate business name. So I'll look up a real estate company sometimes, and it might even be like a franchised real estate company, let's say a Remax or a Coldwell Banker. And when you look up the corporation that owns it, it might be called like XYZ Homes or XYZ Realty Services, doing business as Remax Platinum Superstars, or one of those names that they come up with. And I'll explain the entity part of this, but you're going to want to think about, what is the concept? Are you just going to be Jane Johnson, the broker? That's it? Just you as an individual? Or are you going to build something a little bit bigger, like a team or a company name or something like that? And so with the entity part, I'll explain that on the next slide. But one last thing worth mentioning with your name is that for your address, this is going to come up because as you create a professional profile, if you do it as an individual, then you're going to have your professional physical address. And is it going to be a home address for you? Are you renting an office? You want to take your privacy into consideration. Maybe you don't want to be Jane Johnson, broker, and then have your home address on all of your paperwork, and inevitably Zillow and all these real estate companies online are going to pick up your profile and put your personal information on there. So privacy is a factor. All right, so you can be a sole proprietor. And like I said, you can just operate as Jane Johnson broker, but people typically like to have a business name. So the next step in that evolution is to file a fictitious business name or a DBA, doing business as, with the county. And then once you do that, you'll send a form to the Department of Real Estate, and you can register. You can add your DBA to your broker's license. So now Jane Johnson, the broker, can have, let's call it Sunset Homes, or some name I'm just making up here, but maybe she wants to operate as Sunset Homes. So she'll just get the DBA with the county. You file it. It's $20, $40, depends on the county. It's all different. You take a copy of that DBA, a form from the DRE's website, mail it to the DRE. They add it to your broker license. And now you can operate as a business name, some abstract name like Sunset Homes, instead of your own personal name. But it can go a step further. What if you want to incorporate? Well, then that begs new questions. Do you want to choose an entity like a corporation? And if you do, now I won't go too far down the rabbit hole of corporations, but one question that comes up is if you can have an LLC and have your LLC approved for a corporate real estate license with the California Department of Real Estate. As far as I know, the answer is no. They want a regular corporation. Now you can file and have your corporation as recognized under S Corp or C Corp election status. And there are tax implications that come with that, and that's a separate topic that you should look up. But either way, you can have an S Corp or a C Corp, and both of those can be approved by the Department of Real Estate. Now, when you do that, the idea is that with a corporation, you get legal protection. So in theory, if you're operating as Jane Johnson Real Estate or broker, and something comes up, or there's an error made, or something, let's just say some sort of issue, and it results in a lawsuit or some sort of claim or some legal matter, well, they're going to name Jane Johnson on the lawsuit. She's going to be named as a defendant. The idea is that if Jane Johnson had instead created a corporation called Sunset Homes, Inc., then the corporation would be sued rather than Jane. Now, I have been named over the years as a defendant. It just comes up when you do thousands of transactions. Inevitably, you're going to get named on something. And oddly enough, they name me as an individual. But either way, I don't think that would stick because we're conducting business as a corporation. So you still get that legal liability. But you also get a little bit more privacy because it's not just your name being mentioned. And it does allow you the ability to scale a little bit better as a corporate entity. But there are some drawbacks that come along with it because incorporating is kind of like the 2.0. That's the way I like to look at it. When I used to operate as just kind of a single broker, I was a sole proprietor for a long time. I had my own E&O insurance. As I started to grow, do more business, and then have other agents originally I just had some people kind of in an inner circle that hung their license. I mean, now we have around 250 agents, but at that point you certainly want to incorporate, if nothing more than just for the legal protection that comes with having that corporate entity and doing business that way. But let's talk about some of the drawbacks of incorporating. When you incorporate, so there are startup costs, not a lot, but it's something worth considering. And you can, there's filing fees, paperwork, preparation, depending on some agents or some people out there might use something like LegalZoom, some websites, some might just go to an attorney. Over the years of just dealing with all sorts of compliance, I've realized that just paying a little extra and having an attorney and working with an attorney to do everything right is worth it, in my opinion. And then there's also a minimum tax of $800 per year. So no matter what, each year you're going to have to pay at least $800 to have that corporation in California state income tax. And actually, that's the minimum. There's a number assessed on your corporation's revenue. I want to say off the top of my head, it's 1.5% of revenue. So you have to pay to the state 1.5% of your taxable earnings. I should say that instead of revenue, taxable earnings, or $800, whichever's more. So no matter what, you're going to shell out at least $800, but it could be more. Our company pays more just because of the amount of taxable income. And so that's another cost that you're going to have to consider. And with the Department of Real Estate, you actually have to have a separate corporate license. So I'm a broker. I'm the designated broker of the corporation. I have my own broker license. And with that alone, I could be a sole proprietor broker. But because we operate as a corporation, I have a corporate license where the corporation gets its own license with the Department of Real Estate. So even though I'm the broker of that corporation, the Department of Real Estate makes you get two separate licenses with two separate licensing fees. And then in addition to that, when you have a corporation, you have to have you have to have minutes with your meetings. You have to have separate accounting that goes with maintaining your bookkeeping, and you're filing a separate corporate tax return, and then there's also an annual filing with the Secretary of State. So that's why I say corporations are kind of a 2.0 approach. I personally think that if you're going to scale, you need to do it with a corporation, but you're incurring a big headache of compliance and paperwork and accounting and extra fees. So it's a lot more work, but it's necessary once you hit a certain level, in my opinion. And so that's just to name a few of the drawbacks. And I'm not trying to talk you out of anything, and I'm not trying to advise you to do anything in particular. I'm just telling you what I've gone through, because I've been licensed for, at this point now, over 2 decades, and I've worked as a sole proprietor, as a broker, as a salesperson under another broker, as a corporation, you name it. C corporation, S corporation. I've worked with CPAs and attorneys for many years, and I've experienced it all. So I'm just kind of sharing my experience with you. So hopefully the years of trial and error for me will save you time in this explanation. You really need to have E&O insurance, errors and omissions insurance. I'll tell you a quick story about when that was valuable for our company in the recent future. But any reputable broker is going to have E&O. And think of E&O as a catastrophic insurance policy. This isn't health insurance where you're using it every time you go to the doctor. E&O is different. It's almost like I don't want to say life insurance, because that's a bit of a dramatic analogy, but it's something used when you are dealing with a large and expensive legal issue. Now, something many people don't know is that E&O is not required by law in California, but just the way things are, it's very foolish to not have it. It's a high risk proposition. It's like driving uninsured. You might get away with it for a while, but if you got a car accident and you're not insured, that could be financially catastrophic for you or your family. So errors and omissions, in my opinion, is an absolute necessity. And with E&O, so I'll tell you a quick side note about how we use it, because we went many, many years, and we do hundreds and hundreds of transactions each year, and we never had to file an E&O claim. Then we recently, well, I don't want to say recently, this was a few years ago, but we got named in a lawsuit that was totally bogus. It actually had nothing to do with us. That's the craziest part. It was a matter between two parties long after they had done a transaction together. And the way a lot of attorneys work is they just name everyone they can. And they have this approach where they shake a tree and see what falls out of it. So we were named, and I work with a very reputable attorney, and I showed him what the situation was. I showed him the complaint, and he told me, look, provided your agent did nothing wrong, provided that you are completely innocent of any allegation involving you in this dispute between two parties relating to a real estate transaction, providing all that, completely innocent, you're looking at paying $40,000 in attorney's fees to make this go away. I mean, just the whole process of fighting this, to make it go away. So his advice was just file a claim with your E&O insurance. Sadly, a lot of attorneys know that this is kind of the name of the game. And so sometimes I get these money grab emails from attorneys where they're like, they just say some just completely outlandish, just ridiculous, absurd thing, and then just say, please forward this to your E&O attorney. And so that, they know that E&O companies are more likely to settle, and they're trying to just go for a quick money grab. Anyway, I don't mean to digress largely on this E&O tangent, but it's important because a lot of agents don't realize that they are rolling the dice with every transaction. And as a broker, where I'm privy to seeing hundreds of transactions come across my desk every year, I see the cases where maybe an agent doesn't do a lot of volume, but gets named in a lawsuit and goes through a financially, or has to face the risk of a financially devastating scenario. And maybe that agent did nothing wrong, which is, it's really quite sad. But this is why I see E&O as completely essential, because it puts a cap. You basically pay what's effectively the deductible on it, and then you're covered up to $1 million after that. So you starting a brokerage, you need to know that whether, even if you're Jane Johnson's sole proprietor, the broker, or you're starting some corporation and you want to recruit hundreds of agents, you need to have this. And one last note about E&O, it goes up the more production you do. So the very first E&O policy, I probably spent, I don't know, maybe just over $1,000. And I thought, that's it. That's what E&O costs. And then when our production picked up considerably, the bill, our annual E&O bill, went up thousands of dollars in premium. And then it continued to climb, and it climbs up until you're paying just a large amount for your E&O premium every year. So this is an expense that is necessary. It's just a cost of doing business. But it's something that definitely needs to be factored in, no matter the size of your organization. And then you need to ask yourself, are you recruiting? This makes a big difference because it affects how nimble you are. If you're recruiting, you need to have a policy and procedure manual that is part of your independent contractor agreement. You need to have a checklist of required documents. You need to build a very strong and regimented system that can be enforced, that makes sure you have, that ensures that you have records for 3 years of all the paperwork, not just required by the state of California, but you really need to understand what good practices are as a broker, because if a transaction closes and a crucial document's left out, you're going to be in big trouble. You're going to be in big trouble with the parties that are in a dispute, and you're going to be in big trouble with the Department of Real Estate. I've gone through audits with the Department of Real Estate. I've had several different occasions over the years where the Department of Real Estate has investigated an agent, and that doesn't make the agent a bad person. In fact, sometimes agents that are completely clean get investigated. It's just maybe someone got angry about a transaction and wanted to report the agent because they thought they got the raw end of the deal or something, and so the Department of Real Estate has to take these complaints seriously, investigate them. And as the broker, you get dragged into this because you get these letters and notices that request that you present paperwork. And you need to make sure that your files are squeaky clean and that you have a list and you understand how they work and how they mitigate your liability and your agent's liability, and that you're enforcing that and you're getting all this paperwork from your agents. I can't emphasize enough, you cannot play around with compliance. You have to operate by the book. It will catch up with you if you don't. That's why one of the reasons I'm making this video is to explain that you really need to have a solid foundation in terms of how you build this and not cut corners. Because if you do cut corners, you'll pay far greater in the future, and it's not worth it. So if you're recruiting, you really need to have a system and dial it in that you can enforce that's extremely compliance oriented, because sooner or later, what you do is going to be scrutinized and put under the magnifying glass. And if everything's not in order, then you're going to get in trouble. And I should say, okay, one last note about this, just off the top of my head. As a broker, another challenge is that you're going to have to ask yourself how much time you're spending on recruiting, how much time you're spending on running the operation with compliance and following up. So what happens when an agent gives you a file and a bunch of documents are missing and the agent isn't returning your calls? You need to account for every scenario. And on top of it, what brings in the revenue? Is it you doing business? Is it an agent that you recruited? Is it something else in your office? So you have to you have to balance all these different elements in your brokerage. So I would keep your growth under your control so that you can manage the structure effectively, so that you don't get so bogged down in paperwork and compliance that you don't recruit, or you stop doing deals personally. I mean, I did transactions for years to help add revenue to the company, so the company could build up its infrastructure, and that we could pick and choose. And if agents seemed like they weren't compliance oriented, we could remove them from the team. So you really need to factor in the full scope of everything that you're going to be doing, because if you start ignoring or neglecting a certain part of your business, it's going to make the rest of it suffer. Once all that's done, you need to ask yourself about joining the local association of realtors. Let me explain on this for a second. When I mentioned earlier in that early slide that at its most bare essential form, all you need is a broker license to conduct real estate transactions in California. That's it. That truly is. You're licensed now by the state to do it. How that becomes more complex is that you realize that you need access to the MLS, you need access to a lockbox or a lockbox key, you need access to forms, and there's basically a monopoly that controls those resources for agents. And how it works is there are local boards of realtors all over. There's too many, in my opinion. There's an abundance of them that all feed into a state board of realtors that feeds into a national board, and it's an all-in-one proposition where you're joining everything, all or nothing, where you have to join, and you join the local board, and they bundle your state and national dues all together, and that's how you get access to these resources that agents use. Are you required to do it? No. But if you don't do it, you're going to have a very challenging time conducting business. And if you want to recruit agents, forget about it. I mean, you cannot join, or you cannot not join and recruit agents, because the first conversation you're going to have with an agent is how they're going to access those tools. And you as a broker must be a member of the state, national, and even the local board in order for that agent to join as a member. So, I mean, we're a member of many boards now because we have to be, since our agents are members of those boards. But that's something else you have to factor in that's very important, because for better or for worse, joining these boards is basically integral with managing a brokerage now. If not, I mean, virtually all legitimate agents are members of boards. And if they're a member, in order for them to hang their license with your brokerage, you need to join. So that's another factor worth considering. So our company is 100% commission brokerage, and agents pay $49 a month. There's no transaction fee, and that includes your E&O insurance. So if you're interested, look us up. I mean, you can do this on your own. I highly recommend exploring this adventure. I mean, I went on it. All things considered, I mean, years later, if I had to do it over, if I was going to sell real estate on my own, I would definitely outsource it to a low-cost broker. I would find somewhere I can run my transactions through, and I'd treat them like a kind of back office resource. I'd say, do you offer broker support? Yes or no? Do you pay for my E&O insurance? Yes or no? What else, what can I count on you? Can I run my transactions through you, and you have a compliance infrastructure? And think of it as outsourcing that part of your business out. Because in real estate, it all depends entirely on you marketing to clients. If you sell real estate yourself, and this was a kind of, I don't want to say a mistake, but something that I did too long. To sell real estate and do broker compliance is overwhelming and exhausting. If you're going to do brokerage, build a brokerage and focus on operations. If you're going to sell real estate, outsource the broker compliance side of it and focus on getting clients and closing transactions. bringing clients in and doing deals, that's the lifeblood. That's the oxygen of your business, of the brokerage. And if you're doing that and you're recruiting agents and doing compliance, you're going to tear your hair out after a while. It's just overwhelming. It's too much. Anyway, so if you have questions, please comment, and I do hope you found this helpful. Thank you for watching.